You are on War Profits, where we uncover the darkest and most profitable stories of World War II corporations. Today, we reveal a secret that cost millions of lives but generated billions in profit. Imagine this. While Europe burned, while families were torn apart and loaded onto cattle cars, while entire communities vanished into smoke, somewhere in the pristine valleys of Switzerland, bankers in immaculate suits were performing a different kind of alchemy. They were transforming blood into gold, and gold into something far more valuable: liquidity. This is the story of how neutrality became the most profitable position in the deadliest war in human history. When historians talk about the machinery of the Holocaust, they speak of trains, gas chambers, and factories of death. But there was another machine, quieter, colder,
infinitely more sophisticated. It operated not with violence, but with ledgers, not with guns, but with currency exchange rates. And at the heart of this machine sat the predecessors of what we now know as UBS Group AG, the largest wealth management institution in the world. The paradox was brutal and elegant. For the Nazi war machine to advance, it needed more than stolen gold. It needed that gold converted into usable currency, into francs that could purchase tungsten from Portugal, ball bearings from Sweden, oil from Romania. The Reich needed a laundromat, and Switzerland provided the most efficient one ever conceived. But here's what makes this story truly disturbing. These weren't rogue operators or criminal enterprises. These were respected financial institutions operating within the law, fulfilling what they called their fiduciary duty.
The question that haunts us today is simple and terrible. Can neutrality itself be a crime? Before we dive deeper into this abyss, hit that like button if you believe these stories need to be told. Subscribe to War Profits, because we're bringing you 5 episodes on corporations that profited from catastrophe. And trust me, each one will shake your understanding of history. Now, let's go back to where it all began. The story of Swiss banking didn't start with war. It started with something far more mundane: geography and paranoia. Nestled in the heart of Europe, surrounded by empires that rose and fell with alarming regularity, Switzerland developed a unique economic philosophy. While other nations built armies, Switzerland built vaults. While others conquered territory, Switzerland conquered capital markets. The Union Bank of Switzerland was founded in 1862.
emerging from the merger of the bank in Winterthur and the Toggenburger Bank. The Swiss Banking Corporation came into being in 1872, originally as the Basler Bankverein. These weren't just banks, they were fortresses of discretion, temples of asset management, where the wealthy of Europe could hide their fortunes from revolutions, wars, and tax collectors. The Swiss Banking Act of 1934 codified what had been practiced for decades: absolute secrecy. Revealing a client's identity became a criminal offense, punishable by imprisonment. This wasn't just good business, it was a national strategy. Switzerland positioned itself as the neutral ground where money could flow regardless of politics, ideology, or morality. By the 1930s, as Europe descended into chaos, Swiss banks had perfected a particular expertise: forex arbitrage and cross-border asset management. They understood currency fluctuations better than anyone.
They knew how to move money invisibly across borders. They had relationships with central banks, private clients, and governments across the continent. They were, in essence, the perfect intermediary for anyone who needed to convert assets quickly and quietly. The men who ran these institutions were not monsters. They were professionals. Men like Alfred Schaefer, who would later become chairman of Union Bank of Switzerland, saw themselves as guardians of financial stability in an unstable world. They believed in the sanctity of banking relationships, in the principle that money should be apolitical, that capital markets should function regardless of who was winning or losing on the battlefield. This philosophy would be tested in ways they claimed not to anticipate, though the warning signs were everywhere. When Hitler rose to power in 1933, Swiss banks didn't recoil. They adapted.
When the Nuremberg laws stripped Jews of their rights and property, Swiss banks opened their doors wider, offering numbered accounts and safety deposit boxes. The pitch was seductive. Bring us your wealth, and we will protect it from the chaos consuming your homeland. Thousands accepted. Jewish families from Germany, Austria, Poland, and France deposited their life savings in Swiss vaults. They received account numbers, certificates, promises of security. Many of these families would never return to claim what was theirs, but the banks would keep the money, generating returns, collecting fees, maintaining what they called their fiduciary duty to accounts that had no living claimants. The transition from neutral banker to active participant in the Nazi economy was gradual, almost imperceptible. It began with simple transactions, German clients depositing Reichsmarks, converting them to Swiss francs. Nothing illegal, nothing unusual, just standard forex arbitrage. But then came the gold. In 1939, as German tanks rolled into Poland, the Reichsbank faced a critical problem. The Nazi war machine was consuming resources at an unprecedented rate, but the Reichsmark was worthless outside German-controlled territory. International suppliers demanded payment in hard currency or gold. The Reich had gold, vast quantities of it, looted from the central banks of conquered nations. But raw gold bars stamped with Polish or Belgian insignia were difficult to use in international transactions. They needed to be laundered, recast, given new provenance. The Swiss National Bank became the primary mechanism for this transformation. Between 1939 and 1945, it accepted approximately $3 billion worth of gold from Nazi Germany, roughly 85% of which was looted from occupied countries. The commercial banks, including Union Bank of Switzerland and Swiss Bank Corporation, facilitated these transactions, providing the forex arbitrage services that converted gold into usable currency. Here's how the mechanism worked. And pay attention, because this is where financial sophistication becomes moral catastrophe. The Reichsbank would deliver gold bars to the Swiss National Bank. The Swiss National Bank would credit the Reichsbank's account in Swiss francs. The Reichsbank would then use those francs to purchase goods from neutral countries or to conduct transactions through Swiss commercial banks. Union Bank of Switzerland and Swiss Bank Corporation would handle the currency conversions, the wire transfers, the complex web of transactions that allowed the Nazi war machine to function.
The profit margins were extraordinary. Currency exchange fees, transaction costs, interest on deposits, all of it flowing into Swiss bank coffers while Europe burned. The banks maintained detailed records of every transaction, every account, every deposit. They knew exactly what they were doing, and they did it with ruthless efficiency. But the gold from central banks was only part of the story. There was another source, one that the banks would later claim ignorance about, though the evidence suggests otherwise. Victim gold. In the concentration camps, SS officers systematically stripped prisoners of everything valuable. Wedding rings, dental fillings, watches, jewelry, eyeglasses. This personal property was collected, melted down, and recast into bars. Some of these bars found their way into the same financial system.
Mixed with the central bank gold, laundered through the same Swiss institutions. The Melmer account, named after SS Captain Bruno Melmer, who oversaw the deposits, channeled victim gold directly into the Reichsbank, which then moved it through Swiss banks. The quantities were staggering. 76 shipments between August 1942 and November 1943 alone, containing gold teeth, jewelry, and personal effects from hundreds of thousands of murdered victims. Did the Swiss bankers know? The question haunted post-war investigations. The banks claimed they had no way of distinguishing victim gold from monetary gold, that they relied on German assurances, that they were simply providing neutral financial services. But internal documents tell a different story. Memos circulated warning of suspicious origins. Reports noted the unusual composition of some gold bars.
Yet the transactions continued because the profit margins justified the risk and Swiss law protected them from accountability. If this disturbs you, and it should, hit that like button to support our deep dives into historical archives. Comment below, what would you do if your job required you to process blood money? Would you resign, or would you tell yourself it's just business? The human cost of these transactions cannot be calculated in mere financial terms, though the numbers are staggering. Conservative estimates suggest Swiss banks handled over $400 million in looted gold during the war, equivalent to roughly $8 billion today when adjusted for inflation and appreciation. But that's just the gold. The dormant accounts, the assets deposited by victims who never returned, represent another dimension of profit built on genocide. As the Anschluss brought Austria under Nazi control, Samuel Blum, a textile merchant, traveled to Zurich. He deposited 50,000 Swiss francs in Union Bank of Switzerland, receiving account number 564782. He kept the documentation hidden in his coat lining. In 1942, the Blum family was deported to Auschwitz. Samuel, his wife Rachel, and their 3 children were murdered within weeks of arrival. The account remained active, generating interest, compounding annually. By 1945, it had grown to 68,000 francs. By 1960, over 120,000 francs. The bank sent no inquiries, filed no missing person reports, made no effort to locate heirs. The money simply sat there, generating returns for the institution. Multiply this story by tens of thousands. Polish doctors, Hungarian lawyers, German professors, French shopkeepers, all depositing their savings in Swiss banks, all receiving promises of security, all vanishing into the machinery of the Holocaust. Their money remained, orphaned but productive, contributing to the asset management portfolios that made Swiss banks the most profitable financial institutions in post-war Europe. The banks developed sophisticated internal procedures for handling these dormant accounts. They classified them as heirless assets, a term that sounds bureaucratic, but conceals a moral void. Under Swiss law, if an account remained unclaimed for a certain period, the bank could absorb it into general reserves. No public notice required, no attempt to locate survivors mandated, just a quiet transfer from individual accounts to institutional profit. Some bankers rationalize this as protecting assets from communist governments in Eastern Europe, claiming they were preserving wealth for eventual rightful claimants. But the evidence shows deliberate obstruction. When survivors or heirs did come forward, often decades after the war, they faced impossible demands. Death certificates from concentration camps that kept no records, account numbers that had been destroyed or lost, documentation requirements that no refugee could possibly meet. One particularly disturbing case involved the estate of a Polish businessman named Jakob Teitel. Before the war, Teitel had deposited substantial assets in Swiss Bank Corporation. After his death in Treblinka, his daughter Renee survived and eventually made her way to Switzerland in 1947. She had her father's account number, his signature specimens, photographs of the family at the bank. The bank denied any record of the account. It took 50 years and international pressure before Swiss Bank Corporation acknowledged the account's existence and paid a settlement to Renee's children, a fraction of what the account would have been worth with proper interest calculation. The compliance audit mechanisms that should have caught these discrepancies were deliberately weak. Swiss banking regulations required minimal disclosure,
And the culture of secrecy meant that even internal auditors had limited access to account information. The fiduciary duty that banks claimed to uphold was selectively applied. Absolute loyalty to living clients who could generate fees, convenient amnesia regarding dead clients whose assets could be absorbed. Where are you watching from? Share this video with someone who needs to understand how financial systems can become complicit in genocide. On War Profits.
We tell the real story without filters, and we need your support to keep digging. As the war progressed, the Swiss banking relationship with Nazi Germany deepened in ways that went beyond simple transactions. The banks became active participants in helping the Reich manage its international financial operations. They provided intelligence on currency markets, advised on optimal timing for gold sales, facilitated connections with other neutral country banks in Sweden, Portugal, and Argentina. Union Bank of Switzerland maintained correspondent relationships with banks throughout the Nazi Empire, processing payments for German corporations operating in occupied territories. They handled payroll for factories using slave labor, transferred profits from companies like IG Farben and Krupp, managed accounts for SS officers who were siphoning wealth from conquered populations.
The net present value calculations these banks performed were sophisticated and chilling. They could project the long-term profitability of maintaining relationships with the Reich, even if Germany lost the war, because the assets flowing through their systems would remain regardless of political outcomes. This was capital markets thinking at its most amoral. Optimize for financial return, externalize moral costs. Swiss Bank Corporation developed particular expertise in what we would now call structured finance for the Nazi regime. They created complex transaction chains that obscured the origin of funds, layered accounts across multiple jurisdictions, utilized shell companies and nominees to hide beneficial ownership. These techniques, pioneered to serve the Third Reich, would later become standard tools of international tax evasion and money laundering.
The individuals orchestrating these operations were not faceless bureaucrats. They were highly educated professionals, many with advanced degrees in economics and law. They attended the same conferences, belonged to the same clubs, sent their children to the same schools as the Allied bankers they would negotiate with after the war. This was not ignorance or incompetence. It was calculated complicity, dressed in the language of neutrality and professional obligation. Dr. Paul Rossi, who served as president of the Swiss National Bank during much of the war, later testified that he believed accepting Nazi gold was necessary to maintain Switzerland's economic independence. He framed it as a matter of national survival, arguing that refusing German business would have provoked invasion. But internal documents reveal a different calculus. The transactions were simply too profitable to refuse.
And Swiss law provided perfect cover for moral abdication. The commercial banks followed this lead enthusiastically. They competed for Nazi business, offering favorable exchange rates, expedited services, absolute discretion. Account managers who brought in substantial German deposits received bonuses and promotions. The institutional incentive structure rewarded collaboration and punished ethical qualms. One particularly revealing memo from 1943, discovered decades later in Union Bank of Switzerland archives, discussed the reputational risk of handling victim gold. The conclusion was not to stop the transactions, but to ensure better documentation to defend against potential post-war accusations. Even in the midst of genocide, the primary concern was liability management, not moral responsibility. The scale of these operations is difficult to comprehend.
On any given day during the war, Swiss banks were processing millions of francs in transactions connected to the Nazi war economy. They were converting looted gold, managing accounts for war criminals, facilitating payments for slave labor, all while maintaining the fiction of neutral professionalism. The human stories behind these transactions are what make the statistics unbearable. Every gold bar represented conquered nations. Every dormant account represented a family destroyed. Every currency conversion facilitated another month of war, another transport to the camps, another village razed. Consider the logistics.
The gold arrived in Zurich by train, carefully packaged, accompanied by German officials. Swiss bank employees would verify the weight and purity, process the paperwork, credit the accounts. Did they wonder where it came from? Did they notice the unusual markings?
The irregular composition that suggested melted jewelry rather than central bank reserves? The evidence suggested they knew or deliberately chose not to know, which amounts to the same moral failure. The Forex arbitrage operations required constant communication with Berlin. Telexes went back and forth, discussing exchange rates, transaction timing, account balances. These weren't isolated incidents. They were ongoing business relationships, maintained with the same professional courtesy that banks extended to any valued client. As the war turned against Germany, the Swiss banks began preparing for the post-war environment. They didn't stop doing business with the Reich. They simply added allied clients to their portfolios, hedging their bets with the same amoral efficiency they'd shown throughout the conflict. When American and British officials began investigating Nazi assets in neutral countries,
Swiss banks deployed armies of lawyers, citing banking secrecy laws, claiming ignorance, destroying records. The destruction of documentation was systematic and deliberate. In the final months of the war and the immediate post-war period, Swiss banks shredded millions of pages of records. They claimed this was routine document management, but the pattern was clear. Anything that might reveal the full extent of collaboration with the Nazi regime disappeared into furnaces and shredders. What survived was carefully curated to minimize liability. The banks maintained enough records to defend against specific accusations, while destroying the comprehensive documentation that would have revealed the full scope of their operations. This wasn't incompetence, it was sophisticated evidence management designed to ensure plausible deniability. When Allied investigators arrived in Switzerland in 1945, they encountered a wall of legal obstacles and bureaucratic resistance. Swiss authorities invoked banking secrecy laws, national sovereignty, and the sanctity of client relationships. The banks claimed they were victims of German coercion, neutral parties caught between warring powers, when in fact they had been enthusiastic and profitable participants in the Nazi financial system. The initial post-war settlements were laughably inadequate. In 1946, Switzerland agreed to transfer 250 million Swiss francs in German assets to the Allies, a fraction of what had flowed through Swiss banks during the war. The dormant accounts weren't even addressed. The victim gold was acknowledged in principle, but not compensated in practice. For decades, this remained the official story. Switzerland had maintained neutrality,
had made some regrettable but necessary compromises, had ultimately contributed to Allied victory by providing intelligence and humanitarian services. The banks were portrayed as innocent intermediaries, perhaps naive but not complicit. This comfortable narrative began to crumble in the 1990s, when a new generation of historians gained access to archives and survivors began speaking more forcefully about their experiences. The catalyst was a night watchman named Christoph Meili, who in 1997 discovered that Union Bank of Switzerland was shredding historical documents related to wartime accounts, in violation of a government order to preserve such records. Meili rescued 2 bins of documents and turned them over to Jewish organizations. He was fired, prosecuted for violating banking secrecy laws, and eventually fled Switzerland under death threats.
But the documents he saved proved what survivors had been saying for decades. The banks had systematically destroyed evidence and stonewalled legitimate claims. The scandal exploded internationally. The United States Senate Banking Committee launched investigations. Class action lawsuits were filed in American courts. Suddenly, the Swiss banks faced something they'd never encountered before: real accountability. The compliance audit that followed was the most comprehensive forensic examination of banking records ever conducted. Led by former Federal Reserve Chairman Paul Volcker, the Independent Committee of Eminent Persons spent years analyzing whatever records remained, interviewing survivors, tracking down account numbers and deposit records. What they found was damning. The banks had deliberately made it nearly impossible for heirs to claim accounts.
They had demanded death certificates from concentration camps. They had claimed ignorance of accounts that their own records proved existed. They had absorbed billions in airless assets while maintaining the fiction that they were protecting client interests. The Volcker Commission identified approximately 54,000 accounts that probably or possibly belonged to victims of Nazi persecution. The actual number was likely much higher, given the systematic record destruction. The commission estimated that billions of dollars in current value had been retained by Swiss banks, generating compound returns for over 50 years. In 1998, facing the threat of sanctions and asset freezes in the United States, Swiss Bank Corporation and Union Bank of Switzerland, along with Credit Suisse, agreed to a settlement of $1.25 billion. The banks admitted no wrongdoing.
Characterizing the payment as a humanitarian gesture rather than compensation for theft. To put this in perspective, $1.25 billion was less than the annual profit of these institutions. It was a rounding error compared to the actual value of assets they had retained. And it came only after 50 years of denial, obstruction, and victim blaming. The settlement was distributed to survivors and heirs through a complex claims process that many found nearly as frustrating as the original attempts to recover accounts. Claimants had to prove their relationship to account holders, provide documentation that often didn't exist, navigate bureaucratic procedures designed by the same legal teams that had defended the banks for decades. Many survivors received checks for a few $1,000s, compensation for life savings that would have been worth hundreds of thousands if properly managed and returned.
Some received nothing, unable to meet the evidentiary requirements. The process itself became another trauma, forcing elderly survivors to relive their losses, to prove their suffering to skeptical administrators. If this makes you angry, good. That anger is appropriate. Comment below, do you think $1.25 billion was justice, or just the cost of protecting a larger crime? And subscribe to War Profits, because we're not done with this story. We have 4 more episodes coming on Swiss banking and the Nazi economy, each one revealing another layer of this financial conspiracy. The individual stories that emerged during the claims process are heartbreaking in their specificity. Esther Friedman, who survived Auschwitz, spent years trying to recover her father's account at Swiss Bank Corporation. She had the account number, memorized as a child before deportation.
The bank claimed no record existed. Only after the Volcker investigation did they acknowledge the account, which had contained 12,000 francs in 1942. With proper interest, it should have been worth over 200,000 francs by 1998. Esther received $8,500 in the settlement. Greta Beer's family had deposited jewelry and cash in a Union Bank of Switzerland safety deposit box in 1938. After the war, Greta, the sole survivor, returned to claim it. The bank told her the box had been emptied years earlier, contents unknown. No documentation existed. No compensation was offered. In the 1990s, researchers found internal bank memos discussing the Beer family box, noting its contents, debating what to do with abandoned assets. The jewelry had been sold, the proceeds absorbed into bank reserves. Greta was 89 years old when she finally received acknowledgement that her family's property had existed.
She died before receiving any compensation. These aren't isolated cases. They're representative of thousands of similar stories, each one a small genocide of memory and justice, each one facilitated by banking secrecy laws and institutional indifference. The bank's defense throughout this process was consistent. They were following the law. They had no way of knowing the origins of assets. They were protecting client confidentiality. They were victims of impossible circumstances. But this defense collapses under scrutiny. Swiss banking secrecy was not a natural law. It was a deliberate policy choice designed to attract capital regardless of origin. The banks weren't passive recipients of deposits. They actively marketed their services to clients fleeing persecution. They weren't ignorant of Nazi crimes. They read newspapers, received reports,
maintained relationships with German officials who openly discussed their policies. The truth is simpler and more disturbing. Profit trumped morality at every decision point. When faced with the choice between doing the right thing and doing the profitable thing, Swiss banks chose profit with remarkable consistency. The institutional culture that enabled this wasn't unique to Switzerland, but Swiss law gave it perfect cover. Other neutral countries, Sweden, Portugal, Argentina, also did business with Nazi Germany. But none created such a sophisticated and durable system for laundering genocide proceeds and retaining victim assets. The merger that created UBS Group AG in 1998 came at the height of the scandal, a corporate restructuring that conveniently created distance from the wartime institutions.
Union Bank of Switzerland and Swiss Bank Corporation became historical entities, their liabilities assumed, but their identities dissolved. The new UBS could claim to be a different organization, reformed and modern, while benefiting from the capital base built partially on victim assets. Today, UBS Group AG is the largest wealth manager in the world, with over $3.2 trillion in assets under management. It's respected institution, a pillar of global finance, a symbol of Swiss efficiency and discretion. Its wartime history is acknowledged in carefully worded statements that express regret without admitting criminal liability, that recognize suffering without accepting responsibility. The physical evidence of this history has been carefully managed. The buildings where Nazi gold was processed still stand in Zurich and Basel, now housing modern banking operations. There are no plaques, no memorials,
No acknowledgement of what transpired within those walls. The vaults that held victim assets now secure the wealth of billionaires and corporations. The ledgers that recorded transactions with the Reichsbank have been digitized, archived, made available to researchers under strict protocols that protect client confidentiality, even for accounts from the 1940s. The Nuremberg trials prosecuted industrialists and financiers who collaborated with the Nazi regime, but no Swiss banker faced charges. The legal fiction of neutrality, combined with Swiss sovereignty and allied dependence on Swiss financial cooperation in the post-war period, created immunity from prosecution. The individuals who made the decisions, who processed the transactions, who absorbed the victim assets, retired comfortably, their reputations intact, their pensions secure. Some, like Alfred Schaefer of Union Bank of Switzerland,
were later honored for their contributions to Swiss banking. Their obituaries mention their wartime service only in passing, if at all, focusing instead on their post-war achievements in building Switzerland's financial sector. The moral reckoning that should have accompanied these deaths never materialized. The few bankers who did speak publicly about the wartime period maintained the narrative of difficult choices made under impossible circumstances. They portrayed themselves as pragmatists who navigated between German threats and Allied pressure, who preserved Swiss independence through financial diplomacy, who protected what they could in a world gone mad. But the documents tell a different story. They reveal enthusiasm, not reluctance. They show profit calculations, not moral anguish. They demonstrate systematic planning.
not reactive improvisation. The Swiss banks weren't victims of the war. They were beneficiaries, and they knew it. The legacy of this history extends far beyond Switzerland. The techniques developed to launder Nazi gold became templates for modern money laundering. The banking secrecy laws that protected war criminals became models for tax havens worldwide. The institutional indifference to the origins of wealth became standard practice in global finance. When we see banks today facing fines for facilitating tax evasion, for laundering drug cartel money, for enabling corruption, we're seeing the descendants of the system perfected in wartime Switzerland. The specific crimes change, but the underlying logic remains. Capital has no nationality, no morality, no memory. It flows to wherever it's protected and profitable.
And institutions will facilitate that flow as long as the legal risks are manageable and the returns are sufficient. The question that
haunts this history is whether anything has fundamentally changed. UBS and other major banks now have extensive compliance departments, ethics officers, and anti-money laundering protocols. They tout their commitment to responsible banking, to environmental and social governance, to stakeholder capitalism. But these are the same institutions that resisted accountability for decades, that destroyed evidence, that fought survivor claims with armies of lawyers. The 1998 settlement was not the end of the story. In 2000, additional claims processes were established. In 2005, more accounts were identified. In 2013, Switzerland finally agreed to automatic exchange of tax information with other countries, partially dismantling the banking secrecy regime.
Each step came only after intense international pressure, after threats of sanctions, after the costs of resistance exceeded the benefits of secrecy. The total amount recovered and distributed to victims and heirs is estimated at around $1.5 billion, a figure that sounds substantial until you consider it represents 50 years of compound interest on billions in stolen assets and covers only the accounts that could be definitively identified and claimed. The actual value retained by Swiss banks is likely many times higher, impossible to calculate precisely because of the systematic record destruction. For the survivors who lived to see some measure of justice, the financial compensation was never the primary goal. What they sought was acknowledgement, an admission that what happened to them and their families mattered, that the institutions that profited from their suffering bore some responsibility.
The grudging nature of that acknowledgement, the decades of denial that preceded it, the minimal nature of the compensation, all of this compounds the original crime. Renee Teitel, the daughter of Jakob Teitel, whose account Swiss Bank Corporation denied for 50 years, said in an interview before her death, "They didn't just steal our money, they stole our father's memory, our family's dignity, our right to mourn properly. And then they made us prove we deserved to get back what was always ours." This is the true cost of financial complicity in genocide. Not just the material theft, but the spiritual violence of denial, the institutional gaslighting that tells survivors their memories are unreliable, their claims are exaggerated, their suffering is someone else's problem. The war ended in 1945, but for the victims of Swiss banking practices, the war never really ended.
It continued in claims offices and courtrooms, in archives and hearings, in the endless bureaucratic violence of institutions protecting their reputations and balance sheets. And here's what should terrify us. This could happen again. The structural conditions that enabled Swiss banks to profit from genocide, banking secrecy, weak international oversight, the prioritization of client confidentiality over criminal investigation still exist in various forms around the world. The Cayman Islands, Luxembourg, Singapore, Dubai all offer versions of the discretion that made Switzerland so attractive to Nazi Germany. When authoritarian regimes today loot their countries, where does the money go? When oligarchs steal from their people, where do they hide it? When corporations evade taxes and launder profits, what systems facilitate those flows? The answer is the descendants of the system that laundered Hitler's gold.
The bankers who enabled the Nazi regime believed they were just doing business, just following the law, just serving clients. They told themselves that politics wasn't their concern, that neutrality meant treating all money the same, regardless of origin. They were wrong, and their wrongness cost millions of lives and decades of compounded suffering. We tell ourselves we've learned from this history, that modern banking is different, that regulations and oversight prevent such abuses. But the fundamental question remains unanswered. When profit and morality conflict, which wins? The evidence from 1933 to 1945 and from the 50 years of denial that followed suggests that without constant pressure, without accountability, without individuals willing to risk their careers and safety like Christoph Miley, institutions will choose profit every time. The war ended.
But the profit never stopped. The gold was laundered,
The accounts were absorbed, the records were destroyed, and the system continued, barely interrupted, generating returns on assets stolen from the dead. This is not ancient history. There are still survivors alive today, still fighting for recognition, still seeking accounts their parents told them about in whispered conversations before deportation. There are still banks holding assets they cannot or will not trace to rightful owners. There are still legal structures protecting financial secrecy over justice. On War Prophets, we believe that confronting these truths is essential, not just for historical accuracy, but for understanding the world we live in now. The systems that enabled the Holocaust didn't disappear, they evolved. The institutions that profited from genocide weren't dismantled, they merged and rebranded.
The individuals who made those decisions weren't punished. They retired in comfort. If you believe these stories matter, if you think accountability is important, even decades later, subscribe to this channel. Share this video with someone who needs to understand how ordinary institutions can become complicit in extraordinary evil. Comment below with your thoughts. Can a bank ever be truly neutral? Or is neutrality itself a choice with moral consequences? We have 4 more episodes coming on Swiss banking and the Nazi economy, each one revealing another dimension of this financial conspiracy. We'll explore the gold trains, the art looted and laundered, the insurance policies that were never paid, the corporate networks that connected Swiss banks to the concentration camp economy. This is not about revenge or collective guilt. This is about memory.
About ensuring that the victims are not forgotten, that their suffering is not reduced to footnotes, that the institutions that profited from their deaths are held accountable, even if that accountability comes generations late. The $100 billion silent partner wasn't silent by accident. It was silent by design, protected by law, enabled by international indifference, motivated by profit. That silence was broken only by the courage of survivors who refused to forget, by whistleblowers who risked everything to reveal the truth, by historians who spent decades in archives piecing together what the banks tried to destroy. The lesson is clear and terrible. Neutrality in the face of evil is not neutrality at all. It's collaboration dressed in the language of professionalism. It's complicity hidden by legal technicalities. It's profit built on the graves of millions.
Switzerland kept Hitler's gold, and in doing so, kept the war machine running. Swiss banks kept victim assets, and in doing so, committed a second genocide of memory and dignity. The institutions survived, prospered, and evolved into the pillars of modern global finance. And that should disgust us far more than it does. Remember, every time you see a bank touting its discretion, its client confidentiality, its neutrality, ask yourself, neutral for whom? Confidential for what purpose? Discreet about which crimes? The answers might be more disturbing than you imagine. This has been War Prophets. Don't forget to like, subscribe, and share, because these stories don't tell themselves, and the institutions involved would prefer they remain untold. The war ended, the profit never stopped, and the silence,
Finally broken, reveals an abyss we're still afraid to fully confront.